Hello, grade 11s. Today we're looking at the Eastern Cape Term 3 controlled test that was written in September 2024. So I want us to have a look at question 2, which deals on inventory, and it was allocated 30 marks to be completed in 27 minutes. So as usual, it's really important to take note of the time and the number of marks that a question is allocated. So if you haven't watched question 1 of this paper, I did cover it in a separate video. Please do make sure that you watch that video so that you can be able to get to yourself some valuable knowledge. Okay, so this question, we are given TT Toys. TT Toys is a store owned by Tariro and Tapio. It buys and sells dolls. TT Toys apply a 50% markup on all toys, all right? So that's the first important piece of information. We know that when we're dealing with inventory, we're going to calculate a whole lot of things, including the biggest number, which is our cost of sales. All right, so in this case, we're given 50% on our markup, and then we are required to determine how does the periodic inventory system differ from the perpetual inventory system. So there, it's 4 marks. So usually when things are 4 marks, you have to give two each. All right, so we're going to give two reasons for the periodic inventory system and then two for the perpetual inventory system, just to be on the safe side, because you never know. Sometimes it might be just 2 marks for one item, but sometimes it might be just 1 mark for each item that you list. So we're just going to go straight forward and answer this question. So the periodic system or the periodic inventory system, we know that it happens only once a year, where we are going to calculate our cost of sales only at the end of the year. Now, when we are making sales, we do not calculate cost of sales at every point in time, right? So here, there's no continuous calculation of cost of sales or the movement of trading stock. So this is the periodic. Right, so or we could say a recording, right, something like that. And then also the value of closing stock at the end of the year is only determined through making a physical stock count, right? Because we haven't been recording the movements of inventory, the only thing we can rely on is our physical stock count, right? So physical stock count, stock count. Okay, so this is number 1, this is number 2. Physical stock count helps determine the actual value of trading stock. Value of, let's say, closing stock. So we know that closing stock is at the end of the year. So in that way, it will make much more sense. Right. So now when you look at the perpetual inventory system, we know that it's quite the opposite of the periodic. So movement of inventory, or we can say trading stock movement is continuously recorded. All right. And then secondly, we know that physical stock count is only done to compare between the records that we have and the actual stock on hand, the physical stock on hand, right? So now we know that physical stock count is used to identify stock losses or any missing items, right? So that is how you are going to get your 4 marks, as long as it makes sense and you don't expand too much and waste your time. Okay, nice, sweet, and short, so that you can be able to get your 4 marks, right? So we're going to move on to the second required. So the second required says calculate the cost of sales for the period ended 31 June 2024. Then the last one says calculate the gross profit for the year. So we know that at some point here, gross profit, we're going to use our sales less our cost of sales. So that's something to keep at the back of our minds. And then let's deal with the second one in the meantime. And we are given information A up until information C that we are going to use for this question. So extract from the general ledger 31 June 2024, the end of the financial year. So we're given opening stock, credit purchases, credit sales. Okay, let's just highlight the sales out so that we can know that we're dealing with sales. And then we have credit cash purchase. All right, cash purchase, and then we have cash sales. So these are sales also. um, and then we have carriage on purchase, debtors allowance. So this also will affect our sales. So it's really important to identify which of the things are going to affect my sales or which of the things are going to affect my cost of sales. So what I've highlighted now will affect our sales. All right, remember debtors allowances, it's everything that the debtors return, and we will have to further reduce our sales there. Right. And then we lastly have our customs duties at 23,000, which we are also going to take into account when we're calculating our cost of sales. So now, when we read information B, we are going to identify stuff that affect our cost of sales, and we're just going to highlight them so that we can be able to calculate our cost of sales. Right. So the first bullet point, it reads, an invoice of 34,600 that was issued to Marabastad wholesalers has not been recorded. So in this case, you might be thinking, okay, but we're dealing with an invoice, but think of who issued this invoice. It's TT Toys. TT Toys issued the invoice to Marabastad wholesaler. So this was a sale that we were making, and it's a credit sale. Okay, so this is a credit sale. It doesn't really affect our cost of sales. And then our cost of sales calculation to say. And then the next one says the clerk forgot to record 1,200 transporting goods to TT Toys store. Wow, okay, that's that clerk spelling is very correct. So the clerk, they forgot to record 1,200 transporting goods to TT Toys store. So the 1,200, we're going to include it. Remember our carriage expenses. So we are fine with that. So this is carriage costs. So this is carriage, so that we know what we're dealing with. All right. Then the next one says 25 dolls costing 250 each were donated to the local orphanage. So now we know that this was taken from our trading stock, right? Our inventory. So we are going to reduce this from our purchases. So it's going to reduce our purchases because we are donating the stock. And then fourth bullet point, a debtor returned broken dolls which he bought 7 days ago for 3,000. Now there's 3,000 and then we have 2,000 in brackets. So this 2,000, it means this is the cost of the stock. All right, let me not say cost of sales because we did make the sale and then it returned. So the debtor returned broken dolls which he bought 7 days ago for 3,000 and the cost was 2,000. So in this case, this affects our sales, right? Remember when you calculate, so some of these transactions are actually to confuse you on what goes into cost of sales and what doesn't. We are only going to calculate cost of sales based on that formula of opening balance. So in case you forgot, plus purchases, plus all those other costs, transporting costs, carriage, customs duties, and then we subtract returns, and then lastly we subtract our closing stock. Right. If it's not any of these things, then and you include them, then you're going to have a problem. Right. So you need to remember how this formula works. Right. So then we're going to move on in that case. This bullet point says a debit note of 4,300 was issued for the dolls returned to the supplier because they were of poor quality. Okay, so now this is a return 4,300, nice and easy. Then the last one says Tapia took dolls to the value of 1,350 for her kids. So this is a drawing, 1,350, and we need to take that and calculate the cost of sales, right? And then we are going to remove it from our purchases. So there's two things that you need to do in this transaction, right? But you'll see the numbers as we go along. And then the last information C says that according to the stock taking, the value of the stock is 320,000. So this is the value of our closing stock. All right. Hope that was easy and clear. But now let's get to the most important part, which is plugging in the information in our answer book. Okay, so in our answer book, we're given the opening stock. When we look at the opening stock, let's see how much we had. We're given 230,000. So this is what I'm talking about, 230. So let's have 230,000 here. Then the second thing that we are just going to plug in is our purchases, and then we can talk about our carriage on purchases. Then we have customs duties. This is as far as I can remember. And then what do we have again? Returns. All right, so we're gonna have returns. Don't forget returns. Okay, so for now, let's stop here and then we'll see how we are going to approach it. So our purchases, we have this first amount, we have our credit purchases, and then we have our cash purchases. So we have 715 plus 810. So those are given. So we have 715 plus 810,000. All right. Then let's see anything else that affects our purchases. We talked about an amount of dolls that were donated. Remember, we said 25 dolls, 25 multiplied by 250. So that gives us 6,250, which is going to reduce our purchases. So minus 6,250. And then the next thing that affects our purchases is the drawings done by the owner, one of the owners, Tapiwa. That's the last bullet point, if you remember very well. So it is 1,350 multiplied by. So when we go back, first piece of information, markup was 50%. We know that this is the selling price. This is the selling value. So it's 1,350. And what we want is cost of sales, which is 100 over what we know, that's 150. So if you're getting a bit confused, remember that your selling price is your markup plus your cost of sales. And then here, your cost of sales is 100%. Your markup is 50%. So in that case, we know that our selling price is 150%. So that is what we know. This is what we want. Okay. So let's just quickly do the math. Over 150, then that is 900. Okay, that goes straight into our purchases. We are going to subtract 900. Then let's calculate what we have as our purchases. So that's 1,517,850. Okay, then carriage and purchases, the amount that we are given was 17,000. So looking here, I have 17,000. And then the bullet point that we need to take into account, the one that talks about transporting goods, it's the one that has that click. So it's 1,200. We're going to add the 1,200 worth of carriage on purchases. And then that gives 18,200. Okay, so your signs here are also really important because this is what increases our cost of sales calculation. So remember, at some point or on some of these amounts, you will need to have brackets in order to subtract. Okay, so now looking at our customs duty, when we were reading, there isn't anything that affected our customs duty, so it will remain at 23,000. So that sticks at 23,000. And then returns, there was one return that wasn't taken into account, and it's this return. right? So the return says a debit note of 4,200 was issued to the dolls returned to was issued for the dolls returned to the supplier, right? Because they were of poor quality. So that's 4,300 worth of returns, nothing complicated. And then we're going to have our closing stock because we don't have anything else that is going to affect our calculation. So our closing stock, we had that on information C, and we know that it was 320,000. So, okay, this is what I was talking about. See these brackets, and then 320,000 here. And then, so we have some extra space. That's also okay. And then at the end, we're going to have our cost of sales, right? Then now let's just calculate our cost of sales plus that 850 plus 18,200 plus 23,000 minus 4,300 minus 320,000. So be careful whenever you're calculating, double check your answers or double check the amounts that you put into your calculator. Okay, so that's what I'm getting. And then that is just what we have for our cost of sales calculation, right? So the important thing to do is first understand your additional information and what it needs you to do, right? So don't just read haphazardly and think that you know, okay? Because examiners like putting in tricky stuff, but most usually the transactions are similar. You just have to find the differences between the past papers that you do, okay? So now I want us to have a look at 2.1.3, which talks about calculating the gross profit for the year. So like I said earlier, when we're calculating the gross profit, we're going to calculate our sales amount, right? So let's first calculate our sales amount. If we go back to the information, we know that our sales, we had two types of sales rather. We had cash sales and credit sales, the highlighted ones in purple. So our credit sale was a 990,000, and then our cash sales was 985 400, right? So we're just going to add that and sum it up as one amount, 985 400, and that's 1,975 400, right? So let's just quickly do that. That's 990, just to show them separately because we might be at a risk of losing the separate marks. But if your amount is correct, then that's also okay. Then now we had some transactions that we said are going to affect our sales, right? That are going to affect our sales when we calculate. So now when we go back to information, additional information B, an invoice of 34,000 that was issued to Marabastad wholesalers, right? Remember the 34,600, it was not recorded. So this was a credit sale. We need to increase our sales by the 34,600. So here we're going to add the 34,600, right? And there's something I think I'm forgetting. Our debtors allowance, right? So remember that our debtors allowance is supposed to reduce our sales, so don't forget that. It was 82,000, right? Then now we have that transaction done. There was another one that we said is going to affect our sales. Let's just have a look. So here, this data, a debtor returned broken dolls which he bought 7 days ago for 3,000. So this is also going to form part of our debtors allowances, but it was not taken into account. So we need to subtract a further 3,000. So this cost of sales of 2,000 is just going to confuse you. So 3,000, right, minus 3,000. So our sales amount, let's just quickly calculate. 985 400 plus 34,600 minus 82 minus 3,000, that is 1,925,000. The cost of sales we just calculated, so you don't need to do anything more. So that's 1,464,000 750, right? Then it's going to be negative, and then you just simply subtract cost of sales there, and our gross profit is equal to 460,250. Right, so let's highlight these amounts. Okay, so that is 2.1.3. And then the last question, which is 2.2, says Tapio is required to do accounting equation on the following transactions, and he is struggling as he never did accounting just like his sister. So remember that the business uses the periodic inventory system. Right, the periodic inventory system. What you're not expecting to see is cost of sales and trading stock or inventory. Right, at a point in time where we are making a sale. Okay, so we're not expecting to see that. Remember that cost of sales are only calculated at the end of the year. So we are required to analyze the following transactions, and there's just four transactions that were given, and we need to analyze and put them onto this accounting equation here. The first one, it says they purchased trading stock on credit for 23,700. So here, you know that there's two accounts affected. There's purchases, right? And there's creditors control because we bought on credit. Creditors control. Why purchases? It's because we bought trading stock, right? So it goes on to our purchases. Why purchases? Again, it's because we are not using the perpetual inventory system, but we are using the periodic inventory system. Okay, so now let's look at the accounting equation. Here we are given creditors control. Like I said, the account debited is going to be purchases. Okay, it's going to be purchases, and then our assets, there's nothing that's going to happen there. Remember that purchases is not an asset account, but we consider it an expense, right? So if it's an expense, our owner's equity is going to decrease because an expense increased, right? Hopefully that makes sense. Then our liabilities are going to increase because we bought on credit. So now we owe more. And then the second one, we have paid 1,200 for carriage. So those are carriage fees, and we know that's an expense, and we paid through our bank. Okay, we're already given the account debited and account credited. 1,200 amount. What's happening to our assets? Our assets are going to decrease because of our bank. Our bank decreases, and bank is an asset. Then what happens to our owner's equity? Owner's equity decreases because carriage on purchases is an expense, and expenses decrease our owner's equity. Nothing happens to our liabilities. And then let's look at the third one. The third one says the owner withdrew the stock value to the value of 7,600. Right? So remember, just like we did in the previous question, if the owner takes stock and we're using the periodic inventory system, we are going to subtract that stock from our purchases account because there's no trading stock account. Okay, so we are going to have drawings and purchases. Okay, we're already given drawings, and here we have purchases, right? And then what's happening to our assets? Nothing happens to our assets because our trading stock is not sitting as an asset, but it's sitting in the purchases account, right? Owner's equity, the drawings are an expense, they decrease the owner's equity, right? And then they're not necessarily an expense, but they do decrease the owner's equity because the owner is taking away from their own equity. So drawings are not necessarily an expense to the company, but they do decrease our owner's equity. Okay. And then our purchases, we are going to have a plus You might be asking yourself, why a plus on purchases? So if we are making purchases, our expenses increase, our owner's equity decrease. But now if we are taking away our purchases, which means our expenses decrease. So if expenses decrease, our owner's equity will increase. Okay, hopefully that makes sense, but it will take you some time to actually digest that and be able to understand. But over time with practice, and you can even rewind the video and check what you need to understand. Then nothing happens to liabilities. Okay, then the last one, it's a sale, as you might have seen. It says cash sales amount to 13,500, and this in bracket is the cost of those sales at 9,000. But we are not expecting to see any cost of sales because we are using the periodic inventory system. That is why here there's no cost of sales and trading stock. Okay, so that's 13,500, and you're asking yourself, okay, that's easy. Bank assets increase, okay, because we are receiving cash. And then if we're making sales, it's income that increases our owner's equity, and nothing happens to our liabilities. Right. So we have come to the end of this question two. I really hope that was helpful and you have gained a bit, even if it's not much, or you might have gained more knowledge on inventory systems and how to actually tackle them. Thank you so much for watching. Please don't forget to subscribe, like, share, and drop a comment on any other accounting topics that you might need help with. I'll definitely see you in the next video. Cheers.